away, get away. Let the police from takes away. Although you big problems, you could work it, you could drop them in a blue ocean. But you gotta get away to where the police from. Take me up, pick me up, pick me up, get away. Put me down in your sandwich, put me down. And when I fall, I'm put me down. I'll just sleep there till morning comes down. Good morning, everybody. We'll get started right at the top of the hour. That's about 9 minutes from now. Thanks for joining us today. There's a song in my that I want you to hear. Soft tropical lips that are singing. Get away. Where the police from takes away. Look at their problems. You go wish you could drop them in a blue ocean. But you gotta get away to where the police from. So get away. Where the police from it takes away. Look at big problems. You go wish you could drop them in the blue ocean. But you gotta get away to where. So get away. Where the police from takes away. Look at big problems. You go wish you could drop them in the blue ocean. But you gotta get away to where the police from. And it gets harder than boots. He laid rubber on the Georgia asphalt. Got a little crazy, but we never got caught. Down by the river, here with the cans and the tail boom back. She never did any water, needed to pay. She was ready, so I settled for a burger and a great smoked ham. Got her on early, but I didn't really home. Down by the river, people really can. On the Chattahoochee. It gets hotter than a hoochie coochie. He laid rubber on the Georgia asphalt. Got a little crazy, but we never got caught. He made a so settle for a burger and a great summer cone. Dropped her off early, but I didn't go down. That's good. Scared me just like the stones that you the voices echoed across the land. Scared. Good morning, everybody. Happy Friday. It is Options Expiration Friday. We'll get started here in just about 2 minutes. Just want to get a little closer to our start time there. I know, getting close, getting close. Just waiting for that opening bell, and then we'll get started here. Just a few more seconds. But take a moment, look through the news headlines. Oops, I forgot to organize those. Oh, well. And also take a moment, look over our pre-market tips and what we're looking at to help us understand the trading environment. And there we go. Happy Friday, everybody. And good morning, good evening. Glad to have everybody here. As we get started out, let's take a quick look around. I did have a nice entry on gold, right around that 70.7% retracement area. And we're still looking for gold to move up to about 32.21, 32.84 as we're starting to put in that reversal. And I kind of want to make it noticed, how we had this several drops, and actually there was a couple of more as we look at these here, and looking for that potential reversal and sending gold back up. Okay.
It's going to be instrumental there to watch and observe that. We do have a trade set up as one of our picks on silver. Silver is right there as well. Silver may still be an entry. I don't think I got into it yet. No, not yet. Uh, all right, let's start off crude oil. Things to remember about crude oil. Contract rollover happened on May 17th, which is over the weekend. So you may have already seen some of the volume shift from the front month to the back month. Uh, Last trade date is on the 20th of May. So when we approach contract rollover and last trade day each month on the crude oil and natural gas, they provide us with some pretty good trading opportunities. Okay, 63.17. Let me move that down. The blue line indicates where the 50-day moving average is, and that's, we got a nice little pullback off as price touched that 50-day moving average. Price going back above it is going to be pretty bullish for crude oil. Okay. So anytime that price is also dancing around that crude oil, oh, sorry, dancing around the 50-day moving average, we want to take notice of that. Also note that the Globex range, $1.06 compared to the daily ATR is kind of right in the middle. And when we have that Globex range compared to the daily ATR right in the middle, uh, I shy away from taking that open range breakout, although it could be a decent little trade. It's just these conditions tell me just kind of wait. Now, if we have a narrow Globex range or a wide Globex range, then we will take notice of the bull and bear trap for the wide, and we'll also look for the trend to be when we have a narrow range. Let's see. Natural gas, also one that we participate in the open range breakout. I was trying to document a couple of things this morning. Um, Typically, we see that at the pit open, which happens at 9 a.m. Eastern time, is we see the price about 50% of the daily ATR, and that's what I was pointing out. I mean, it happens quite a lot. So I utilize that for projecting a price move. Okay. Now, this particular price pattern, as we're looking at it, we're also coming off of a a demand zone. I do think we're going to head a little bit lower before we start back to the upside. So I'm going to place a trade right now, and I'm place a trade taking short from the open range breakout. Clean that up. The low of the pit open at 3.347. Okay. And let's just stretch this out. I'm just taking a couple of my notes. Every day, we take observations of what we're going to be doing. And a lot of times we need to document these things so we have evidence of what we've been doing. Okay. So that's my annotations and things like that that I have posted there, but I can clean those up. You can clean them up as well if you've done that type of annotating on your charts there. Um, so I just set up a trade to sell short natural gas. Okay. Now, natural gas with this particular pattern, we have multiple touches across the for a resistance. We often get that little fake out breakout, and then we'll look for price to move lower. Let me see. I'll go ahead and draw out the pattern that I'm anticipating. Okay, we've got that drop. And we have resistance being formed. So most of all of us trade with pictures, and when we are looking at the price charts and anticipating what to do on the right side of the chart, okay, using the pit open, identifying a place to enter and where I can manage my risk. Okay. Now, this particular product pays out $10 per tick. So you have to be aware that how many ticks are inside of that. I'll be taking the trade short at 3.347, and I'll be placing my stop loss just above at the resistance area up here at 3.370. If that risk is outside your trade plan, you can trade a micro contract or not trade it at all. Okay. Remember, every trade that you get into, you have to accept the risk on a trade, because I'm not making the trade for you. You have to anticipate, does that risk on that trade, is it within your trading plan? Okay. And if it's outside, just accept it. Okay. We can't trade everything. And if it's outside our risk management parameters, we'll still become scared traders. Okay. So with the price pattern that you see up on top, as I just identified, this is what I'm visualizing to the right side of the chart. Now, I still have risk on every trade, but I'm looking to enter using the open range breakout. I'll place my stop 3.370, and a projected move on this using this last swing up based on the structure. We often see that this can lead into a reversal pattern. Okay, and we're right in the area for that reversal pattern. The 224, 2618, and 314 are reversal patterns for a V shape. 1618, 127 would be for an inverse head and shoulders pattern. Okay.
Order filled.
The trade is live. Let's come back up here and 3.370. We're going to place our protective stop loss. Now, once you place that order, okay, and your order is filled, make sure you take a moment again just to verify how much risk you have on the trade. Okay. Are you still prepared to take that trade? Okay. So if you all of a sudden you get into a trade and you look at the risk and you go, oh my gosh, oh, that's way outside. You may have just a few minutes to assess that and say, okay, well, let me resize that, or get out with a smaller loss and stick to your trade plan. Okay. All right. So we got natural gas going, crude oil. We're just waiting to see what's going on. And we're waiting mainly because the Globex range compared to the daily ATR is right about that 50%. And that often leads us to more of a choppy session open. Okay. S&P. All right. Now, S&P futures, before we jump in and start identifying the levels and such like that, let's take note that we have NVIDIA and Apple. Okay. And Apple's getting, there's some news around it, and also some news around Alphabet. Okay. And why we pay a close attention to the large market cap weighted stocks is Google Alphabet, a part of Google, and Apple have been the laggers for this move up. Okay. If we look back on the large market cap weighted stocks, and we're just seeing that Microsoft just hit an all-time high or scratched it. Okay. We can see that Alphabet and Apple are the ones that are nowhere near. So if they start moving up aggressively, as we have seen NVIDIA, seen Broadcom, Microsoft, Tesla, okay, we might get that follow through with the overall markets, okay? So why do we come out and look at these large market cap weighted stocks? Well, futures are a derivative and they follow what the large market cap stocks are doing. So having a good idea of the big picture of what's going on and then paying attention to the two laggards, in this case, that are not following through, we're going to be watching for news or reports, announcements with Google and Apple, okay? So Apple is getting a little pressure from President Trump right now. There's some news things going on with that in the pre-market as well. Another thing that we'll point out, let's see, at 10:50 a.m. Eastern, Trump's to participate in a US UAE Council roundtable. Okay, so whether that's via a webcam or something like that for that, I don't know if that meeting is still going to take place in the UAE, but you never know. Those guys have been really busy this last week doing some amazing things. And yeah, as I remember, let's see, partners, owner, poised. And yeah, let's see, Trump is not happy with how Apple plans to escape China tariffs. Okay, Alphabet stock is now almost as cheap as eBay, okay, by the metrics. So yeah, there are some news around Apple and Alphabet, okay. We had housing starts and permits, imports, export prices came out earlier. Next one is consumer sentiment. Okay. And then we have a couple of Fed speakers in the evening. And of course, what I just pointed out with Trump at 11 a almost, well, 10:50 a.m. Eastern. Okay. So let's jump back out to the S&P. Now, S&P is outside day, and the inside outside day give us different trade opportunities. Okay. But let's look at the volume and measure the cash value. So right now we have the volume, which is still on the lighter side, okay? But the lighter side seems to be becoming the new normal, okay? So when we have light volume on the Dow 30 stocks and we are approaching economic data, we can expect that the economic announcement may have some whipsaw price action. Okay. So if you understand why the price whips up and whips down, then and using this, you can say, okay, let me observe this for a period of time. And if the volume is light or heavy or normal, okay, how will I use that information? Well, if it's very light and we're approaching some economic reports, we may anticipate that there may be some volatile price action. Now, for some traders, that's the best trading environment for them. For a lot of traders, the quick moves can stop them out and also cause a little slippage on a trade entry. All right, so outside day, and we're still about 15 minutes away from the market open, we will look for whether price of the S&P closes inside the prior session's range, or if it closes or opens outside the range, then we'll look for more of a gap and run. If it opens inside, then we'll look for the gap and fill. Okay. We do have a demand zone 59.28, 59.21. This is a London Open area. We also have the gap fill from the 5 p.m. close. So we're going to be watching that area on the S&P. Okay. So and then we have some deeper zones. Didn't make this a prep screen zone because it did happen in just before the regular session open, so technically it's in the right place, yes, but it did happen outside of the regular trading hours. So we know that prep screen zones are generally the zones that are created during the regular trading hours, which have a little more institutional participation. Okay. All right. Let's see. So that is the S&P. We'll be watching for the gap fill. Will be, which would be a great entry to go long once it comes back down to the zone 59.28, 59.21. Okay. Oh, another thing that we do need to point out for while we're looking at market conditions, the dollar has been moving up and now kind of flattened out in the pre-market, but the 10-year yield and the 2-year yield are moving lower. So conditions of the market, okay? When the dollar and the 10 and the 2-year yield are not correlated, they don't look the same, it's a more difficult trading environment, and often waiting a little bit longer at the open to get a good trade entry is better practice. Okay. So a little bit on the waiting side, we're going to be choosing our entries a lot more specific, and we're going to be waiting a little bit at the open. So just be prepared using this information, verify it over a period of time and see if it fits within your trade plan. Okay. The pre-market trend is also in the neutral area. Okay. The pre-market trend kind of gives us a heads up whether traders are aggressively buying or whether they're just in consolidation. Trend being above 2, we'd be very aggressive to get into trades, or trend below 60, we'd also be aggressively looking to get into some trades. Okay. But the trends in that consolidation area. Okay, so a little more on the waiting, see how the information kind of keeps saying, let's wait a little bit. But which direction should we anticipate the trader's sentiment at the open? The NASDAQ pre-market indicator has about a 92% correlation as to traders' sentiment at the open. The pre-market indicator was developed by developed in the Philadelphia exchange, and the NASDAQ exchange bought it when the PICOs shut down. Okay, so sorry, the Philly exchange. So we are seeing a small gap up. Okay, so trader sentiment at the open is a little more on the bullish side. Okay, so a pullback into a demand zone would be a great opportunity. The volatility index is also showing that the fear gauge is off to the side and more leaning to greed and or complacency, and then the greed. Okay, we're only trading down about 40 cents. Okay, so it's not a big event. Again, all of these pieces of information, as you observe them, can help you understand the trading environment. Another thing I wanted to point out is the market on close order imbalance that came out yesterday, market on close. We had 3.4 billion a buy imbalance, and we had 2.56 billion NASDAQ buy. So you see, these are some very large buy imbalances that came into the market just after close. Okay. Now, that doesn't mean there's a trade opportunity. It just implies that, wow, everybody's piling into the market. And we can see that a couple of days ago, it was really kind of much smaller. Okay. But the last 2 days have been building up. Now, who is buying at the top of a market? Well, a lot of these orders could potentially be the mutual funds and big players buying into that market ahead of what basically the president came out and said, buy, buy, buy. So they're coming in and buying, buying, buying. You can see that, which leads more to the uptrend. Now, within an uptrend, we need to see a pullback. Okay. So observing that, wow, if price came here, I would look to go long, and then I would anticipate something like this. Okay. And now visualizing what you anticipate to happen, you become more prepared for if it does, then you will. Okay. You can already recognize the risk on that if we do get that gap fill. NASDAQ is doing some things a little different today. Okay. NASDAQ is still inside the prior day's trading range. We expect a gap fill for that. And if we're going to get that gap fill, then price would need to come down to about that 21,400 area, 21,348 being the stop loss. Okay. Very often we see when price opens inside the prior session's range as we get the gap fill. Almost 85 to 90, well, yeah, 85, 95% of the time, we'll see that gap fill. Now, since we are waiting and we don't have a very aggressive just jump in the market and let it go, okay, we're waiting for price to pull back into a demand zone, okay? We will stay away from taking breakout trades when the index is inside the prior day's trading range, okay? Because often you'll get kind of that whipsaw and choppy move. I will point out that the Michigan Consumer Sentiment Report that comes out at 10 a.m. is going to reflect how we felt last month, okay? So that report, okay, is last month's data being announced today. And that report has a very big impact on the traders' sentiment. Did we get stopped out in that gas? Yep. That gas has had some very big whips lately too. So we are just 7 minutes away from the open. You notice how crude oil is being really quiet. Volatility on gold. All right, so let's come back to the Dow. Dow is outside day. We still have a probability that we can fill that gap since we are waiting. Price coming back to fill the prior session's close or that gap fill. We do have a demand zone 42,395, 42,350 in context of uptrend. Also note that where the Dow is still inside or between the 50 and the 200 simple moving average, where the S&P and the NASDAQ are above it. Okay. So little Dow is going to try to play catch up. Okay. Now it's either the S&P and the NASDAQ go down or the Dow is, going to go and catch up with them. Okay. These are significant places, and understanding when price is in between the 50 and the 200, things can be consolidating, kind of like what we're seeing right here when we got a high tight base on that. So a small pullback, filling the gap, coming down 42,395, 42,350 would be a place to be watching and waiting for the return there. Okay. We want to anticipate buying on the dip. Okay. So if price does come back in there, recognize what your potential risk would be on that trade. Okay. And see if it fits within your trading plan. Okay. And Russell also in between the 50 and the 200 daily moving average. Russell also consolidating. If these markets are going to be a broad-based rally to the upside, then the Dow and the Russell need to catch up and get above that 50 sorry, above the 200 simple moving average, okay? For the Russell, we're looking for price to pull back. Just underneath the resistance area, we have the gap fill, and we have the trade opportunity at 2104, 2100, okay? Now, I'm still waiting. I want to see how the market's going to open in just a couple of minutes. I also want to see the market open order imbalances and see what happens there. Okay. And see if it's a buy imbalance or a sell imbalance. My guess with the way that the index, or sorry, the stock are moving, is there's going to be a small buy imbalance. Okay. The smaller the buy imbalance, the more we'll be just waiting a little bit. All right, let's come back and review what we're going to be looking at on the equity indexes. Looking for an opportunity to get in on the pullback and the gap fill on the Russell, 2104, 2100. Okay, mark it on your chart. Doesn't mean trade it. Okay, just mark it and verify. Okay, Dow. All right, coming back in. 42,395, 42,350. And we'll look for an opportunity to buy, but recognize now what the risk is on the trade. You're looking at about 45 or 40, 35, 40 points on the Dow. So if you're trading micros or minis, do the calculation and understand what your risk is on that. Okay. All right, NASDAQ, we are expecting the gap to be filled inside day, and we're looking for that area. Probably could reduce this one. There's a smaller leg base right down there, 21,378, 21,348. Okay. And for the S&P, 59.28, 59.21. Okay. And we still got about 2 minutes for market opens. And we have a less probability that the S&P is going to come back and fill the gap, but we can still anticipate it. Okay. If it does, then what will we do? Okay. Take note of how much Apple and Nvidia, that they're both gapping up over $1. Okay, right here at the session open. That's also kind of bullish. We have 0 Dow stocks below 94 cents, and we have 8 positive. So cash and futures are balanced at this point. When cash and futures are balanced, okay, we have to anticipate there's not much to do until futures become oversold relative to cash or overbought relative to cash. Okay. So a lot of our signals, a lot of the information that we collect in the pre-market, some of it I've shared with you this morning, is really to help you understand the trading environment and then plan the trade. Okay. And oh, look at that, coming right inside the prior day's trading range. So yeah, we're looking for the gap fill as a high probability. Okay. All right. Now you can set some of these trades up ahead of time. Take a moment, and for those that have been around our course material, take a look at the leg base group of candles. Anticipate that if the leg candle leaving our leg base, our zone, if it's bigger than the leg candle in the zone, price should come a little deeper. Okay. So I'm going to look for that opportunity to be a buyer. I'm going to set the trade up, because I'll be doing some other things. I'm often get distracted there. 59.28, and then I'll have a stop loss at 59.21, starting off with a couple of micros. I can always add on later. So 59.28. And then I'll be placing my protective stop loss about 59.21. Okay, so that trade is set up right there. We'll wait for it. NASDAQ. Okay. Keep an eye on NASDAQ. I mean, you can get a little whipsaw on this. Okay. Let's see. Let's drop down to a smaller time frame and look at that 21,378 area. Okay, so I jumped down to a tick chart to kind of get a little different piece of information. We can see that price is coming back into looking for the gap fill, but also into a buy territory. All right, we do have a leg base down there. Thanks, Matt. And happy Friday. Elite Trader Funding, glad to have you here. We do have a couple of giveaways today from Elite Trader Funding, and I'll talk about that a little bit more in a few moments when we in between. Okay. All right. Yeah, so that we're kind of looking on a small time frame. Looking for that range right there. Okay. Let's see what else we have. S&P. Now you might be asking, why do I have all of the resistance and the buy territory? Look, first and foremost, I educate people to train the eyes for the picture on the price chart. Okay. So where do we look for the unfilled buy opportunities? Well, we look for them where we had an accumulation of buy orders, and we can see that we had an accumulation of sell orders. Now, there were just keep it real simple. When we have a resistance area, that is more sell orders than buy orders. When we have a buy territory, there's more buy orders and sell orders. Okay. Price only moves to where we have buyers and sellers. Okay. I mean, the algorithms in the marketplace are very clear about what their objective is. It's to process orders. Okay. I got a smaller tick chart. There we go. That's a little better. I went to a smaller tick chart, and we got a little less risk. We are approaching the gap fill. You can see what a session break is. And then we're potentially looking for a little more detail. Yeah, we're just kind of focused right on that 59.33 area for the proximal line entry, and then we'd have our stop loss a little lower. Sometimes by adjusting the chart, the time frame, you can reduce the risk. You still follow the same process. Okay. Bank index, just to note, is dropping. Okay. And let's see. Ooh, Dow came down, taking out. Okay, I'm going to participate in this, but I'm going to use a confirmation. We did fill the gap as we were anticipating. Okay. So I'm going to come back in as price starts to leave this. Let's see on a tick chart. 500 ticks not giving me a good setup yet. I guess we're in there. It's just going to be a little wider. Should the wide zones, price does not go too deep into the zone. Okay. I also want to point out that we do have a small support area right here, and price made a higher high before coming down to that. Okay. We have filled the gap. Let's anticipate if price starts to leave this area. Still could come a little deeper, but that's what we're waiting for. Got another leg base over here. Okay, that's almost a trap. 42,392. I'm going to enter long. Oh, I need to go over and look at that. What time frame was that, Matt? 15-minute on Coca-Cola. Okay. Yeah, if you want to see what Matt's doing with his trades, you can go in the Discord room, and just amazing what he's doing. The charts are so very clear and put together for stock trading and your option traders. Okay, so I'm going to come in about 42,375. And then once filled, I'll come back in and place my protective stop loss. I'll probably use a trailing stop here. Okay. All right, how are we doing in NASDAQ? NASDAQ, we're still waiting. Dow did overshoot. So when you get to overshoot at that area, especially by making a higher high, look right below it. There's also what we call a speed bump or a little trap. Okay. Kind of a rally-based rally picture, if you will. Okay. Russell has also come back down to the demand zone. And right into that buy territory. Get rid of that. There. And Russell just did tag that speed bump. Okay, so I'm going to use a little more of a confirmation entry. Wait, anticipating the turn. Let's jump down to the smaller time frame so we can assess that risk. We just got filled on the Dow. We've got a small risk on, let's try and find out a little bit. There we go. All right, so we have the Russell. Risk is about 6 points. Okay. Now, this buy territory that I have is potential there, okay, is not yet confirmed. Okay. On the tick chart. So I'm going to use back out to the larger time frame, and I'm going to use a confirmation entry, and I'm going to look for price to trade above 104.5. Okay, and then I'll be going long on that trade 104. Okay. Once I'm filled, I'll come back in and place once I'm filled, I'll place a trailing sell stop on that. And nothing done on the Dow, S&P yet. Okay. Whoa. Well, nat gas just lifted off. And whoo, nice trade on silver. Okay, almost up to that first target. And how's our gold doing? Yeah, gold's coming up nicely. Today, I want to point out that over the last week, we noticed that there was a shift where the bonds and notes, 5, 10, 30-year bonds and notes, have been inverse of the equity indexes. Okay. Now, when bonds and notes are inverse of the equity indexes, this is a different trading environment. This trading environment has come in, since I got a lot of longevity in these markets here and been around them for several years, is when the bonds and notes are going down and the equity indexes are going up, this is often in a very bullish market environment. Okay. And each time this condition, if you go back in history, okay, you go back to Bush when he senior, Bush Jr., okay, when they came out and said it's time to buy, then you had Obama and you had Biden, okay, they all presidents come out and say it's a good time to buy in the market. Buy, okay? It's not Kramer speaking because the government or the president controls the markets as best he can. Okay. Now he wants certain things to happen, but when the president comes out and says it's a good time to buy in the market, you don't want to keep trying to short the market. You want to look for the opportunity to be uh, a participant, okay, in the trend. Now that's why we're looking at a lot of pullbacks, okay, and we're looking for where would we go long in this, but we also have to be mindful of what else is happening in here. It looks like we are getting that pullback into those zones. We're almost approaching the first, we're a couple of minutes away from the quarter hour, okay? And we do use that quarter hour. We got corn, yeah, Bitcoin is still going. We want to look for price to arrive in a demand zone or a supply zone on the quarter hour, okay? In both of these cases, things have come in a little early. Okay, so I'm going to play more defensive right now. Boy, it looks like our silver is almost up to target one. Go, go, go. Yeah, we do have that dead space. The dead space is the area between the resistance and support. Okay, and silver does have a large time frame that we could be looking at as well. Oh, beautiful move there. Okay, I just had to make an adjustment. I do have a trade on that right now. I had $100 risk. You can see where we entered, and I'm just looking for that profit target up there, which is our what we just saw on here, which is that target one area. Okay, there's could be more into it. Okay, this is a 70.7% retracement, and often when you get that picture, okay, oops, when you get the picture here where this drop to base is bigger than base to rally, then you have a retest. Now, Fibonacci ratio 70.7. Okay, now remember the big odds enhancer here is the drop to base is bigger than base to rally. If it holds at 70.7, price is often has one of their biggest runs. Okay. A very good example of that is what we traded on wheat the other day with this information. Okay. We had dropped a base bigger than base to rally. Price came up, made a higher low at a 70.7% retracement. And we had a very nice trade off of that. Okay. And smaller risk. Okay. Right. I'm about ready to take my silver trade off. I'm hoping it'll go right to my target. That's always good for the ego. Oh my gosh. Did I call that gas wrong? Oof. But I love my stops. Look at that move. Anybody get the open range breakout on that gas to the upside? I had my plan and I stuck to my plan, and that plan includes having a place where I take the risk off. Okay. Oh, Miss Faye, I'm so proud of you when you do that. Great job. Did you put Roe in the basement again? Is he taking the same trades?
Order filled.
All right, what are we at here? We just got into Russell. Let's come over here. All right, Russell is live. And I'm going to come in here and I'm going to trace, we are long Russell, and I'm going to place a trailing sell stop. Okay. Now, you manage the risk how you like to manage it. Okay. I placed a sell stop market. I'm looking to not be distracted with a lot of other things. I'm looking to stay in the trade a little bit longer. Okay. I'm just going to have a trailing sell stop. And as long as it keeps going up, we'll be doing okay on that. All right, the Dow. Yeah, I'm gonna get my stop loss order in place. And I now have a trailing stop on the Dow. Okay. NASDAQ, ooh, just barely missed. We did get the gap fill. Now, remember some of the information that we talked about. Inside day gap fills most often. So you knew what you were waiting for. It just didn't get to the number where I had an order placed. Okay. So using that information on the price chart can really be helpful. Okay. Look like we're getting a nice move there. And we're still missing out on the S&P. So we got the Dow, Russell, and let's see, what else do we have? And that gas just going right to the darn moon. I'm so excited for you, Miss Faye. That's that's a great trade. Okay. I know you've been working with well, you've learned a little bit from Miss Chris and how she participates in that too, and she just gets real patient trading the crude oil and the natural gas. So beautiful job. Made my day. All right, let's see. We do have small time frame on the S&P, and price is building an accumulation of buy orders. As we can see, we have multiple touches of resistance. We're 10 minutes away from the economic report coming out. Okay. Okay, 10 o'clock. So we're looking for clues to get into a trade. I'd like to see price clear this on the S&P, clear this resistance area, but we do have some obstacles up in front there. Yeah, I'm getting the feeling that we're going to see some volatility around the consumer sentiment number that's coming out in 10 minutes. All right, taking a quick look, I'm going to change these to an 8-minute chart. I want to get an idea of what the NASDAQ stocks are doing, the large market cap weighted ones. And what I'd like to see is, you know, them having a higher low and green candles if this market is going to continue to the upside. And Broadcom, it got a pullback at the open, still waiting for it to participate. Meta, boy, a lot of volatility on Amazon and Microsoft. So, wow, at a glance, we can see that, you know, Apple, NVIDIA, Tesla, and Google are looking more to the bullish side. And what I'm looking at specifically is the last 5 candles or so. Okay. Last 5 candles. Yeah, I'm looking for a direction. So we got 4 up and basically 4 down. Okay. So what we could expect on the NQ till after the 10 o'clock is that choppy sideways conditions in the marketplace. Okay. Yep. And this particular pattern makes me very cautious in front of the economic report, because when we have that drop and then we have the 3 touches here, very often we get price to have a pretty aggressive drop before the rally. So again, it's all pattern recognition. Our brains work on patterns. Our subconscious is collecting information every single time. Every single time you pull up a chart, and it collects it in a split second. Makes you feel good about the trade or makes you feel uncomfortable. You need to trust those, because the patterns you see just have to be clarified, and then you can learn how to apply the patterns that you see on the price chart, just as we're doing now. Okay. Wow, gold getting a nice little bump. I may move my profit target up if gold starts to catch on. Okay. Playing it a little defensive right here, because we have seen the 5-year bonds and notes, sorry, the 5, 10, 30-year bonds and notes moving up. But they could be just about to change. Now, when the yields, the 10 and the 2-year yield are just inverse of what the bonds are doing. And as you look at the 10-year and the 2-year yield, if they're in a place that where the market looks to find demand and move up, then you would be defensive on your bonds and notes. Okay. Dollar is getting a little push down, which should raise our equity indexes back up. Okay. It feels like there's a ton of information that, oh my gosh, this is way too much. But when you first started driving a car, even though you've been in the car for what, 16 years on average, watching everybody else drive, and now it's your turn. Okay. What information do they know, which is experiential learning? What do they know that you don't know? Okay. Well, as a new driver in the market, okay, yeah, I know how to buy, I know how to sell, I know how to look, you're familiar with it. Okay. But are you really in a position to engage in it? Okay. Now we are looking at a breakout here on the S&P as price moving up. Okay. But we do have some obstacles over here. Needs to get through a lot of this. Okay. And once it starts moving through it, we may have an opportunity. Now, the S&P did not come all the way back down to the zone I had marked, but it did come and fill the gap. We're doing on the Dow. Dow's doing good. Okay, we got a trailing stop on the Dow. And our target range is going to be that 200 simple moving average. And I'm going to go ahead and place that 43.25. I'm going to place the approximate area for that 200 simple moving average. Okay, and we can see that from the daily chart, that number is 43,025. Okay, and that aligns really close to where we have another prep screen zone up above. Okay, now that's going to be the target. May not get there today because we do have another prep screen zone in between. Okay, but we're seeing the information we collected, the information we put on the price chart, the shapes and patterns, what led to potentially a successful trade. I say potentially because I have a trailing stop on this, okay? And how about the Russell? Russell doing good too. Okay, now I do have a trailing stop on the Russell. Beautiful entry off of a leg base, okay? We're still looking for it to break above the resistance. Okay. Russell, same as the Dow. 22,018. Okay. Which would, there we go. There's our 200. Simple moving average for the daily chart. We'll use that as kind of a projected area. Look at that. Crude oil almost doing nothing. Okay. One of the clues I shared with you today is measuring that Globex range. Understanding that Globex range, and if it's about 50% of the daily ATR, is very often we see this choppy environment here. Okay. Callie, did you get in that gas as well with Miss Fay? I was on the wrong side of it. I did get stopped out on that. Had a picture in mind. Oh, on the ES? Okay, be careful right now because we do have the economic report coming out in just a moment. Okay, about 3 minutes. But what a nice textbook setup, huh? All right, looking at the NASDAQ. Now, we are approaching a economic report coming out. Okay. And that economic report is by itself. It is the consumer sentiment report. We notice when reports come out together, we have less of an impact, at least for the last 17 weeks, that's been happening. And when they come out single, they have a bigger impact, reaction, okay? Since we have a single report coming out in 2 minutes, we may see a bigger reaction, and you have to have your stops in place or step aside if you don't want to participate in that reaction, okay? Now I've got my trailing stops on. I'm going to take the risk, okay? We don't know what the report's going to be bullish or bearish, okay? We don't know how price is going to respond to that. Some people like to be on the sidelines when a report comes out. And the report is almost here. Yeah, let's watch the price reaction. This is a small time frame here. We're going to watch that reaction. When I start off my analysis, I'm always looking for where we have a solid resistance.
Order filled.
Yep, there we go. What did we get stopped out on? The Russell. Okay. Now, with my trailing stop, I did take a loss of $27 on the Russell. I'm not bearish. I'm just going to look for the opportunity to get back in, and that may be when price starts to break above this resistance area. Okay. Now, I'm not sure what the actual report was. Let's see, 50.8. The forecast was 53. So it came in up lower than the forecasted. Okay. Now, one of the things I learned recently, and I appreciate the Elite Trader Funding and their Discord chat room, and they have a lot of great traders in there as well, is they showed me a website that has been very instrumental, and it's called Financial Juice. It's almost like my old Bloomberg terminal. Okay. Now you can go Elite, but we don't, we're not affiliated with them. It's just, this is a tremendous place for breaking news and news feeds. Okay. And if you've ever had any experience trading um, if you've ever had any experience, so it's coming up, uh, using a Bloomberg terminal, just the information you get here is just amazing. Okay. Um, and a Bloomberg terminal back in the day was the 20 over, yeah, almost 30 years ago, was still $3,500 a month. So it's expensive, but this one here, a lot of the news right now on this website as they get started has been extremely helpful and detailed. And you can search what you want and get a lot. So I want to thank Elite Trader Funding for some of their traders and their Discord room and their trading room. Now, Elite Trader Funding is one of the companies we are working with to using a proprietary trading firm, okay, where you can use their money to refine, and their rules around becoming a funded trader, okay, are very, very specific. You need to understand the rules to participate. But if you can pass the evaluation, you can move on to the next level, which you get a simulated funded account, which you get paid on. Okay. If you're brand new to trading, kind of looking around, okay, to see if this is what you want to do, start off with some of the proprietary trading tools out there. And with Elite Trader Funding, this has been really eye-opening to help you learn how to trade better. Okay. Now, there are rules, and becoming a disciplined trader, you do have to take that in account. Now, keep in mind, depending on your location, you may be able to participate in that. In Indonesia, I don't think you can, but I think it's still okay in Singapore for the Singaporean students there. Okay. Now, make sure that you check those rules out too. Okay. All right. Let's see. We got that. Let's come back in and look. All right. Dow S&P is still holding its momentum. It looks like they're shrugging things off. We're still in our Dow trade, but we had a protective stop loss on the Russell. I may jump back in on this, but I'm going to wait just a little longer. Either the Russell needs to come down into a buy territory. Now, these are just my trading rules. Okay. Everybody has their own trading rules. And just think of us as a guide. Okay. If you still think that Russell is still on the bullish side, then find your way in using your trading rules. I'm going to wait till 2118 and see price breaking above that to get a little more commitment in that price move. Okay. And let's see. Yeah, I think there's a drop coming up on the NQ. We're going to watch this one. See, it has a price pattern that makes me very cautious. Okay. Where we have that drop and then we have the base. Okay. We do have two bottoms or two low points inside of that. So trade at your own risk. I am anticipating that things might get a pullback off of that. Russell. Okay. Now, as an odds enhancer, okay, as an odds enhancer, watching the large market cap weighted stocks, okay? And the reason I pull these up is because I'm looking to see what the last 5 or so candles are doing. Are they bullish or are they bearish? Okay. Stocks impact the exchange traded fund. Exchange traded fund then impacts the futures. Futures are a derivative instrument and they follow the cash market. So what is the cash? Well, it's the real products, a tangible asset, which is stocks. And a group of stocks reflects what happens on the exchange traded fund. And the computer for futures market is called Globex. Okay. Now, sometimes we refer to the Globex as that overnight trading, okay? But the Globex is a computer, okay? It's an order matching. And the computer adjusts price up or down based off of the stocks and the exchange traded fund, and then it becomes futures. Why do I like to trade futures products? Because they always follow something, and I can use collectively information outside the price chart to support that trade direction. Okay. All right. So we're getting a nice bounce up off of the Dow. Nasdaq actually catching a little wind off of there. We're still looking price target, larger time frame up around 21,564. We got an opposing zone on the Dow up above, nothing really in the way. And we'll look to participate in the Russell once it gets a little more strength. You know, the presidential tour that's been going on around over in the Middle East right now, what we refer to as the Mid East, is a large amount that is benefiting S&P, NASDAQ, and the Dow. So keep your ears and eyes open for when somebody starts touting the small market caps. It's coming, okay? But he hasn't put the small market cap stocks into the limelight yet, okay? And once he does, the Russell will start to join the uptrend a little more aggressively, okay? All right, how are we doing? All right. So the other part of this particular price structure, let's just do a little lesson while we're waiting here. Okay. We had to drop. See, one of these price patterns, or these price patterns, they evolve into other price patterns. Okay. Now, this one is a red flag to me where we see that resistance level. Okay. Basically, prices meeting some sellers. Okay. And let's see. What were traders thinking at the open? Oh, okay. Yeah, bringing this back up. The market order imbalance. We had S&P was a buy imbalance, NASDAQ would buy imbalance. So there was buying coming in, okay? Or buy imbalance, okay? So with this particular price pattern, there's a couple of different outcomes depending on where the low pivot points are in this area, okay? Now, if the low pivot points are on the left or the middle, you can often experience a little breakout and then price coming back down. Kind of a drop base drop on a larger time frame. Now, what we're seeing here is multiple touches of resistance are all across. It's like there's sellers, but there's more buyers below it, okay? So we just got another pullback. Let's get rid of that. And this pullback made a higher low. Okay. Since we've already got 2 touches in the base, I'm going to change my speculation to this becoming a drop base and a rally that follows it. Okay. Now that doesn't mean I'm hitting the button right now. And I'm going to follow through with this here in just a moment. But I'm going to plan an entry. And the entry I'm going to plan on this particular price pattern is going to be at the breakout. Okay. See, when you're learning about supply and demand and the picture of supply and demand, okay, a fresh accumulation of orders must be identified. Okay. And you identify that fresh accumulation of orders by finding the sellers or finding the buyers, support or resistance, and then using the area above or below that area to find a way into it. Okay. Now, it is still possible. And I'm going to plan the other direction. So you don't want to get just overly bullish or overly bearish. Okay. This price pattern leads to a drop base drop or a drop base rally. We're just waiting for it. Now, if it's a drop base drop, okay, then we're looking for it to be a buyer at one of these levels. If it's a drop base rally, we need to have a place to plan an entry, okay, where we can manage the risk, okay? So as this trade is developing, okay, and we had a beautiful trade setup on this yesterday during this time when it was developing, and it even aligned with one of the harmonic patterns, okay? So this about the same time of day and things we're going through right now, okay? We were building that buy territory, okay? We saw that we had sellers coming in, and as price broke out a little bit, came back in, we found some buyers. We also found a price structure, and my friend Scott Carney uses harmonic trading patterns or Gartley patterns, okay? And I always mention Scott Carney when I'm speaking about the harmonic patterns, because he is the one that came up with them. Now, he referenced H.M. Gartley, which his book was published in the 1935, okay? And the patterns are still here, okay? So as we look at that buy territory right there, let's open this up, okay? And right now the market is potentially building another buy territory. And just the images on the price chart, we use those to help us anticipate, well, if price breaks out, making that higher low, okay, where do I want it to go? Okay. Now you can adjust the time frame to get the picture that is satisfying to you. We use all of this information to help us anticipate the right side of the chart. After all, they're just price patterns, okay? And the more that we get comfortable observing the price patterns, we then know where to apply a trade, okay? Now, the application of a trade is vastly different than just calling the market, okay? The emotions change, not because of the chart pattern, because the money becomes real, okay? Even if you have a simulated account or a prop account, the emotions change. Until you master those emotions and put those things together, consider using a prop account to get those mastered before you get your own personal money into the game. Okay. So we're just kind of waiting down here. I'm going to enter a trade to go long. Okay. Keep in mind, we do have an open area. You can take the breakout, or you can wait for price to close above the breakout and then come back into it. Okay. Now, what that might look like, and if it becomes a drop-based rally, then you may not be able to get into it later or into it from this entry. So you have to determine, is the time of day right for you to take a breakout trade? Okay. You can wait for the breakout and then anticipate that if and when price comes back down to the origin of that move, then you'll have your supply and demand trade. Okay. By studying the left-hand side of the chart, we learn to then forecast the right-hand side of the chart. Okay.
Order filled.
I just closed my silver trade. I'll look for another entry as it pulls back. Okay, so let's set this one up. NASDAQ. I'm going to participate in the breakout. It's about the right time of day. Between 8 a.m. and 11 a.m. Eastern is where most of the institutional order flow gets completed. And we're just about at that time. Okay. Breaking above 21,447. I'm going to start off with a couple of micros. And then I'll have a trailing stop. I'll initiate upon that breakout. Now these trades are a little more risk. Because price hasn't taken out a prior swing high. Okay. But this is potentially the origin to take it out. Now you're taking on a little extra risk. That's why I gave it a little extra room for the trailing stop. What we need to see now, if this trade is going to manifest and go to the upside, and now we do have an active buy territory, okay, is we need help from the stocks. So on this small time, or on this, when we're watching the stocks over here, what we need to see is they're all starting to throw some green candles to the upside. Now, even the Broadcom, Meta, and Amazon, Microsoft that were lower at the open are now starting to throw some green candles. NVIDIA is still showing some green, and Tesla. So all of them are starting to turn up on a small time frame, except for Apple. Now, Apple does have some news, but it does have some weight on this market. Okay. So in order to get strong momentum and follow through on this, we need Apple's participation. Okay. Now, take a moment and observe what's going on with the Qs. Wow, that is choppy. Okay. Yeah, we'll see, but we have made higher low, and we're looking to see if we can take out a higher high. Okay. A YM chart with our trailing stop is still working just fine. Okay. This is now a support area. Oh, nice job, Callie. Gonna miss it though. Oh, you might get it a second time. Okay, yeah. Russell is just not participating with the the other indexes just yet. You still in your S&P? That was kind of whipsaw there. Now, Matt showed us a chart on Coca-Cola this morning. I'm gonna drop back to the 15-minute. Oh, nice job, Matt. You can see that right away. Now, if you're struggling to see why Matt may have taken a short trade on Coca-Cola right here, let me walk you through what we teach you in the Mastering the Charts Part 1, okay? And Matt does a phenomenal job of documenting his charts. Here we have a support area, step number 1. Step number 2, we identify the sell territory. Step number 3, we look at the structure inside. And then we locate the leg base group of candles. Yeah. Okay. So the setup is understanding where the buyers were supporting price and where the sellers were getting out of a position, going out to a larger time frame, assessing the overall trend direction. And in this case, we were making lower highs and lower lows, so the trend was down. Okay. In a downtrend, we sell short in supply and we look to take a profit in the opposing zone. Okay. Now, very often you can get a 1-to-1 or 2-to-1 trade off of these. Okay. By using a Fibonacci price extension from the distal line to the drop and the bounce back up, we can then plan for where we have a profit target 1 and 2. Okay. So super job, Matt. I mean, that was such a textbook trade. Okay. All right. So how's everybody doing? Are we still in our trades? Oh, got the breakout. It didn't take us out of our trailing stop. Getting a little volatile here. See, as things started to slow down, okay, you can also see that the stocks kind of slowed their momentum. Now, today is options expiration. We have about 35 more minutes before the banks and institutions complete their order flow. Okay. Now, the information that we collected and shared with you in the pre-market routine, we do this each day and put that out on our website. Okay. You can grab the pre-market routine course. Okay. We have a lot of different courses offered out there. And with the pre-market routine course, you can learn to you can then learn all the things that we are putting in to our pre-market analysis, okay? And all the things that we're looking at. We start off with a couple of them. start off with a couple of them that we're measuring. One that's pretty easy is an inside day, outside day. Okay. All the information needs to be verified by you, not by me just telling you, yeah, the statistics. Okay. Once you verify that information, it becomes your information and you start to incorporate that into your trading plan. Right. All right. I'm about ready to come back in on that one.
Order filled.
And now we'll look for support from our stocks. So if you're joining us on the YouTube channel today, in our live stream, we do this every Friday. We'd like to invite you back next Friday if you want. If you want this during the week, we have a great community trading room, and we also have the live trading room that we do 5 days a week. Okay. I like to trade with the students. I like to participate with them, and we like to show you the charts forming and working in real time. Okay. This is where students can learn very quickly to trust the information that they're verifying or documenting. Okay. And I also want to give thanks for the Lead Trader funding to have some of those eval accounts for us to share with you students, and for you guys to get your prop trading underway and then use the Elite Trader funding account, pass the evaluation, and start making money from them. Okay. Follow your trade plan and follow the rules and manage your risk. And in that, I think we're just kind of going to be chopping sideways a little bit longer. We'll see if we get a follow through on this. Again, the indexes are not going to move unless the stocks move. Okay.
Order filled.
So having a good idea what the stocks are doing. Yeah. Can be a great odds enhancer for you. Okay. Always manage your risk. Another shout out to Miss Faye. I'm so excited for you when you get those big runs. Nice job. Nice job. All right, we're going to wrap up our trading session today. I have a meeting to jump into, but I would also like to invite everybody into our Discord room. If you'd like to participate in some voice channel, we'll be hanging out in there a little bit later. Okay. I do have a short meeting, and then I'll be in there probably in about an hour's time. Great job, everybody. Have a wonderful weekend and a happy Friday, everybody, and trade safe. Thanks again, everybody.